When we consider home ownership today, we're often really concerned about interest rates and sales price, and that's for good reason. My name is Peter Ferguson. I'm a local realtor, and in this video, I'm going to talk about the 8 tax benefits that come with owning your own home. For most people, their home is their biggest investment, and it's important to understand how the IRS sees it. So sit back, relax, and I'll break it all down for you. Before we get started, have you recently bought a home or are you looking for a home? Let me know in the comment section. Who knows, maybe I can help you out. If you want to be notified of new videos as they come out, press the subscribe button. And if you find this video helpful, press the like button. It will help me out a lot. Let's get this video started. Number 1 tax benefit, mortgage interest. As we know, when you have a mortgage, you have an interest rate. When you make your monthly payments, a portion of your payments go toward the principal balance and a portion goes toward the interest of the loan. So the interest that you pay is a deduction. The limits are $750,000 for a married or single filer. If you are married and you file separately, it would be $375,000 each party. I guess that's also a benefit of getting married for all of you that are sitting on the fence in regards to that. Number 2 tax benefit, home equity loan interest. Now, similar to the mortgage interest, as we have seen homeowners equity rise a ton over the last couple of years, a lot of people have used their home as collateral to borrow funds to pay for other things, such as a down payment on a second home or to renovate a room in your current home. Now, just like your mortgage has a portion going to principal and a portion going to interest, that is the same with a home equity loan. So that interest portion is deductible. Number 3 tax benefit is discount points. Now this one really hits home with where the market is currently at. We have seen mortgage rates climb so much this year that has caused a lot of buyers to hold off. A buying home has gotten more and more expensive as those rates have increased. Well, there are a few ways to lower your interest rate. In some cases, it is the type of mortgage, but in some cases, you may just want a 30-year fix and you need to know how to lower that rate. Well, you can buy down that interest rate with points. I recently had a client do that by spending $5,000 to get his mortgage to a number that he was comfortable with. Well, that $5,000 he spent to buy down the interest rate is a deduction. So the cost of buying the points is deductible. Remember that the loan origination costs are not. So you just need to be aware of that. Number 4 tax benefit, property taxes. When you buy a home, you are going to get hit with both state and local taxes. As a married couple, you can deduct up to $10,000 in property taxes. If you're a single filer, you can deduct up to $5,000. Now, this can be a huge cost savings depending on where you live. Number 5 tax benefit is necessary home improvements. Now, necessary is sort of the key term there. If you have a fully functioning kitchen, you may not be able to deduct the cost of renovating that. But if you have a necessary reason, maybe a medical need, such as like adding rails or a ramp or widening a doorway for better access, those things would qualify as necessary home improvements. Number 6 tax benefit is home office expenses. Now, a lot of people started working from home during the pandemic. And I think there'll be a lot of changes or gray area to this deduction because a lot of people have not returned to an office yet. So if you operate a business in your residence, you may deduct some of the expenses to maintaining that space. You want to work with an accountant to figure out exactly how much you actually use and what you are using it for. But rest assured, if you're running a business out of your home, you can deduct some of the expenses used to maintain that space. Number 7 tax benefit is mortgage insurance. Now, a lot of first-time home buyers do not have 20% to put down on their first property. In many cases, if you do not have 20% to put down, the lender will require PMI, which is short for property mortgage insurance. Now, this protects the lender should you not be able to make your payments. So a lot of first-time home buyers hate having PMI, and I get it. But if you can afford it and it gets you in the property that you want to buy, then it makes sense to have it. Now you know that the insurance is actually a deduction. Number 8 tax benefit is capital gains. Now this comes into play when you sell your home for a profit. So if you bought your home 5 years ago and today you sell it for $50,000 more than what you bought it for, then the $50,000 is your capital gains. Now there's a tax on those capital gains. If you lived in that home as your primary residence for at least 2 of the 5 years, you can keep a good portion of your capital gains. Married couples can keep up to $500,000, whereas a single person can keep up to $250,000. Over the last couple of years, as homeowners saw some really big gains, this deduction proved to be one to pay attention to. So there you have it. There's so many great benefits to owning a home, and I hope you take into consideration these great tax benefits. Again, if you found this video helpful, I'd really appreciate it if you could press the like button. If you want to be notified when I have a new video, press the subscribe button. Thanks again for watching this video.